The chart of accounts is the foundation to your accounting system. It keeps everything consistent and accurate. I'm Jessica Krause from New Life Accounting, and this is Build What Lasts. And today we're going to dive into the chart of accounts and why it is so important. It is, as I said, the foundation of your accounting system. So it really helps set up your books to be accurate and consistent for the life of your company. So if we can, we like to set it up correctly from the get-go. If not, one of the first things that we do when we bring on a client is review their chart of accounts and make sure that it makes sense with what they're trying to accomplish. So some of the key things about the chart of accounts is in the cost of sales categories and the expenses as a whole. So we break out costs into 3 different categories. And you have direct costs, which are typically in that 5,000 GL code range, depending on how your books are set up. And those are going to be anything that is applied directly to a job. So you have a cost and you can say specifically that it is applied, it is for this one specific job. If the next category is indirect costs, and those are typically in our 6,000 GL ranges. And that is going to be anything that has to do with having a project or doing a job, but isn't necessarily for one specific project. And I'll get into some examples of what those would look like as well. And then you have your overhead costs. And those are going to be anything related to operating your business from an overhead standpoint. So behind me, you can see an example of chart of accounts. So I will minimize my camera here and we will go through what this chart of accounts looks like and is saying. So we have, and this is just an example, and it's going to vary a little bit depending on your industry or what size of company you are, industry within the construction industry. So if you're a GC, if you're in residential versus commercial, if you're a subcontractor, if you have 50 million in revenue versus $1 million in revenue, it's all going to vary a little bit in that. But this is an example that we have. So you'll see that all the 1,000 accounts are going to be your assets. So your bank accounts, your receivables, any note receivables that you have, prepaid items, and all of your assets and depreciation. Your 2,000s are going to be your liability accounts. So this is going to be your accounts payable, any line of credits, equipment loans, all your payroll liabilities, if you have union fringes as well. You're going to have sales tax payable. I didn't mention if you have a WIP report in your assets, you're going to have underbillings, and in your liabilities, you're going to show your overbilling accounts here. And then your 3,000s are going to be equity accounts. So again, depending on how your entity is set up, if it's a partnership, an S Corp, a sole proprietor, that's going to look a little bit different. You're going to have different account names, but we still use that 3,000 categories numbering system for the equity accounts. Your 4,000s are going to be revenue. And you'll see here we have regular contract revenue, service work. So depending on how you're breaking out, you may track your revenue differently. Maybe you are residential and you do roofing and windows and siding. Maybe you want all 3 of those revenue pieces broken out. Maybe you are an electrical contractor and you do high voltage and low voltage plus service work. Maybe you want some of those broken out differently. So depending on how you want it broken out, and then you're going to have your over-under billing adjustment, prior year over-under billings. And here's where we get into expenses. So as I mentioned, 5,000 direct costs, 6,000 indirect costs. So 5,000, your materials that are for a specific job, your labor that is for a specific job, your subcontractors, your equipment expenses, all of those things that you can tie to one project. Your indirects could be depreciation, any indirect labor and burden. So some people might have a warehouse that they are keeping all of their tools, and they have a specific warehouse or shop employee that runs tools to job sites, that may be an indirect cost for you. Small tools and supplies, safety and training. So some of those things would be some indirect cost. And then in your overhead, you're going to have anything that is related to operating your business. So we have advertising, bank charges, overhead depreciation items, licenses and fees, office supplies, professional fees, so like your CPA, your legal, repairs and maintenance, administrative salaries, travel, utilities, those kind of things are all going to be in there. Then we do have this other category in the 8,000s, that's interest income, other income, gain and loss if you sell equipment, things like that. So having the chart of accounts set up correctly is really going to give everything that runs through your bank and runs through your business a home. And it's going to allow us to be really consistent. So you can look at these costs and income and revenue items period over period, and it can be consistent. You can see where the trends are within your business. Some of the areas, the mistakes that we see, when we're able to sort this out, it helps us narrow down and get a better picture and fine tune those mistakes. So some of the things we see is like indirect costs end up showing up so anything that should be in that 6,000 category, those indirect costs, end up showing up in job costs, but they're not assigned to a job. So having a good, solid chart of accounts that everyone in the accounting side understands helps prevent some of those mistakes. We also see that indirect costs show up in overhead. So you might have safety and training in your overhead costs. You might have warehouse or shop supplies in that overhead area. And that's going to skew like those numbers so that you can determine what is your overhead percentage. Where are you running at with overhead, and how do you add that to marking up your projects and things like that. So having the costs in the correct categories is going to help you with a lot of things. So that's why I said this is the foundation of your accounting system. When loans aren't set up correctly on the chart of accounts as a liability in those 2,000 accounts that we looked at, those can be classified wrong as well. So those can end up on the expense side under overhead when really they should be hitting that liability section for that loan. And then sometimes one of the big things that we see that is all lumped together and not really split out really well is payroll items. So we have all payroll hitting overhead when really the payroll needs to be allocated to either direct costs or indirect costs. So sometimes that gets jumbled up there as well. So again, having a good solid chart of accounts is going to be the foundation. It's going to allow you to accurately report your numbers and use that data for other things, other projections and estimates in your business. It's going to allow you to have consistency so you can see trends and you don't have a cost hitting this account one time and this account the next time because no one really knows where it needs to go and should go. So having a good solid chart of accounts is key. And that's one of the first things that we look at when we onboard a new client. So as I say, content doesn't mean anything without some action. So I encourage you to take some time. It doesn't need to be very long, but go through your chart of accounts. See if it's actually set up the way that makes sense to you, the way that it should be. Use our example here. Do you see that thousands and all the assets are in one category and 2,000s are all in liabilities? And do you see that direct cost versus indirect cost and overhead all broken up, or do you see all the costs in one section? So review your chart of accounts, make sure it makes sense. If you need any help, feel free to reach out. We are happy to give you an hour of our time to see how we can best help your construction company as well. So I know your time is very valuable. Thank you so much for watching. I'm Jessica Krause, and I'm here to help you build what lasts.